Hello again, everybody. Doing here from DRFX Forex and Trading, taking a look at another currency pair today. This pair is the Swiss franc Japanese yen. Now, as you can see here, the market has basically been moving in a sideways pattern over the last several weeks. This has basically been in keeping with the projection based on what I had seen in the downtrend that was formed here earlier this year. Now, taking a look back at that analysis, you can see here from the screenshot of that last video on this pair that I had projected the market to pull back bearish further below this broken trend line, and then continue to rally and move sideways to form this projected consolidation setup. This projection had to do with a certain feature or set of features with regards to the downtrend that was in place before the market actually reached this trend line. What you will find across the currency market is that there's certain dynamics and certain technical factors and certain market patterns across the currency market and across all time frames that help us to determine when the market is actually going to start its movement in a particular direction and when that trend is going to come to an end. So based on those factors that I had identified with respect to this downtrend on the Swiss franc, that downtrend was expected to come to an end despite the strength of that downtrend. So there are certain factors and there are certain technical characteristics of the currency market that you will find that help to determine whether or not you should continue to trade in that particular direction, or whether you should exit your trade or not trade altogether, given the high probability that the trend is actually going to come to an end based on those factors that you have identified. So essentially those are the factors. There were certain factors that I identified with respect to this downtrend that led me to the conclusion that we are actually going to see a sideways movement, which is basically and exactly what we're seeing now. So what we have right now is that the market has formed this projected support boundary. It's more or less a little higher than a range support. So it looks as if this could actually be the support of a pennant setup. So we had the projected decline followed by a U-turn and a projected rally, and we could be in the early stage of the formation of this second resistance point, which would complete the resistance boundary. From here, the market is expected to continue that movement within the boundary to complete the setup with another decline in favor of the Japanese yen, followed possibly by another rally to continue the movement within the boundary. This would eventually give way to a breakout, which will either see the market break support at this area here to resume the downtrend and resume the break of this major uptrend line that, as you can see here, has been in place for a very long time, since all the way back to 2012. Or we could actually see the market continue in favor of the Swiss franc and actually break back above this uptrend line and break above this downtrend line to continue in favor of the Swiss franc and to continue the uptrend. So those are the two possibilities that we could actually see once the market forms this consolidation setup with another set of movements within this projected boundary. So let's take a look at what could actually take place at this area here. If this projected movement bearish is going to continue, then it could provide a strong trading opportunity for us to trade that movement. So depending on the types of signals that we see here, we could actually take advantage of that trade. And given the distance to the support boundary, we're talking about a possible 200 pip trading opportunity over the next couple of days. So trading this is going to be done based on a set of rules that I've established to take advantage of these types of movements. When it comes to trading within the boundaries of consolidation, you can either trade the movements after the consolidation has been completed, or you could trade, as in this case here, while the movements are taking place to form that consolidation, which is a bit more of an aggressive move but is also rewarding, and you can basically capture a large number of pips before before the boundary has been completed, because after the boundary has been completed, you might not get the same strong trading opportunities with strong signals. So trading within the boundary of the consolidation while it is being formed is a viable opportunity for us to trade and take advantage of and to capture pips in the short term. So based on what we see here, we could take advantage of it as long as it complies with the rules that I've established to take advantage of these trading opportunities. Once you have established that the market is forming the consolidation setup, then you simply follow the rules with regards to trading these types of setups. There's certain rules and guidelines that I've established to take advantage of these movements. And once the pattern that we have seen that you have identified on the particular pair conforms to what we can trade and is in sync with the rules and guidelines that have been established, then we can trade them. So the next step would be to follow the steps with regards to identifying and trading the setup, fill out the trade analysis and chart analysis sheet, and then once once you- once you have once you have confirmed that the market has conformed to these rules, then the next step is to fill out the trade sheet, fill out the price, the entry price, stop loss, your limit order, your leverage if that is applicable to your trading platform, and you're gonna be either entering the market at the market price or placing an entry order in order to ensure that the stop loss conforms to your risk reward capital management guidelines. You then change the trading platform to another currency pair so that you're not tempted to monitor your trade, and and then once you have established the number of days that the market is expected to take to hit your target, then you simply write that down and check the trade at the end of each day until that projected holding period has expired. So that is what we could do. So those will be the steps that you would take to take advantage of a unexpected break back below to the support boundary, as long as we have a strong setup and a strong signal that will allow us to take advantage of that move. So we're gonna wait to see what takes place at this area over the next couple of days on the daily chart as well as the 4-hour chart. And once the setup and signals are in sync with these trading guidelines and the trading parameters, then we can trade them. And based on the distance to the support boundary, we could get a very handsome and large trading gain of 200 pips. So until then, take care.